We're at 70. Let's call it 70 on Brent.
Yep.
What do we get next year?
Next year, I think we're averaging 60.
Right.
High conviction.
High conviction.
High conviction.
What gets us there?
So, I mean, we've got broadly slowing demand growth. It's been something that's been going on for 12 to 18 months. We're merely projecting that to continue over the next 6 to 12 months.
Yep.
And, you know, we've got to go from 1.4 million barrels a day this year down to 0.9 million barrels a day next year. And then on the supply side, you've got this really strong non-OPEC supply growth, really broad-based over the next 6 to 12 months. It's starting to impact the market. Look, the market's become, I would say, consensus bearish because the balances look so bad for 2025, in particular for the first half.
Is it a choppy market, though? Because we're still trying to figure out what the outcome of the US election is, what the economic outlook is going to look like, how many rate cuts we're going to see. How much volatility do you see in that price?
Yeah, it's certainly going to be volatile on the way down. Or at least we expect it will be. So
right.
We've had a big move lower to the kind of bottom end of the last two-year range. And market's quite short here. As I said, it's become consensus bearish. Yet the balance for this quarter is broadly balanced, a small deficit, actually.
Okay.
Libya could be offline for months. I mean, we just don't know at this point yet. It's too early to say. But it certainly looks like the risk is that actually this disruption goes on for longer than the market's currently pricing. And the Fed could cut 50 basis points. Our house view Fed cuts 50 basis points. So there's room for a $3 to $5 move higher over the next week or two. And, of course, we'd be recommending our clients sell that rally.
So, Max, we heard it from Jeff there as well, but it is broadly known that the price curve is flattening as well. You talked about it from a demand perspective, but what is it actually pricing in? Is it U.S. demand? Is it Chinese demand? Is it OPEC oversupply? Like, where's this coming from?
Sure, yeah. I mean, I think the market, time has passed and we've got closer to what looks like a high conviction surplus for next year. And, the oil market price is a couple of months forward on the futures contracts and on Brent. And the market's just simply got closer to D-Day, really, to that kind of big surplus that we've been forecasting for some time. I mean, I would say the market is trying to send a strong signal to OPEC that there's no room for any more barrels. And in fact, the market would, the bulls certainly, and our balances suggest that OPEC needs to cut a whole extra million barrels for the entirety of 2025 to balance this market.
How far are we then from a curve in contango if we're talking about oversupply on the horizon?
Look, I think averaging at 60, we're going to be in a moderate contango. The market's in a bigger contango than it looks because interest rates are quite a bit higher. So, yeah, not far, 3 to 6 months.